Hey there everyone. Today we're going to do a quick video on the S&P 500's best and worst performing sectors in 2022. If you like this kind of content, you want to see more, I'd really appreciate it if you drop a like, drop a comment, consider subscribing to the channel. Would really help me out a lot. But we'll get right into it. Okay, so obviously S&P 500 in 2022, not a great year overall if you're looking at all the different sectors that are that comprise of the S&P 500. You'll notice one obvious outlier: energy really boomed this year. Lots of that obviously due to geopolitical factors that really drove up the price of oil and gas. But you can see huge performance from energy, up about 50%. Within energy, that splits out even a bit more. We'll look at that more closely later. But that's really the only category or sector that's really in the green this year. You see utilities is about break even at 0.6% gain overall. But for the most part, it's just energy leading the way and offsetting lots of the downside that we've seen to a certain extent. Looking at the worst performing ones, you'll see information technology down 24%. Consumer discretionary is another huge one, down 33%. And then communication services down 38%. So a trend here of people not necessarily going out and buying the same kinds of things that they were over the last few years, whether that's new houses, boats, cars, stuff like that. And then some of the sectors that are a bit more debt ridden, like communication services and real estate, also performed really weak this year. So that's another thing to keep an eye on as we evaluate 2022, but also look into 2023 to see, hey, which ones of these sectors may be on the other side of the coin next year. Something that was interesting was while energy was by far and away the leading sector, there were areas of consumer staples that performed really well as well. So brewers, for example, were up 14%. Tobacco up 5%. Soft drinks, think PepsiCo, Coca-Cola, up 7%. And then some other areas like household products and super centers, stuff like that, was really just down single digits, where the total S&P is down more 15 to 20% overall. So even though they're slightly down, you're seeing it here, they really held up a lot better and protected capital a lot better than just the general market. In terms of trends throughout the year, you'll see that for the most part, the trends are pretty in line. Like energy, for example, you'll see the ups and downs across the board. Personal products, so I think this is things like products and things that you don't necessarily need within consumer staples. So like big ticket items, TVs, cars, extravagant accessories for your house, slowly trended down throughout the year, which was really interesting, as that's kind of a potential proxy for how people may be feeling about the economy, their job, going into a recession potentially, things like that. So that was one that kind of, no matter what the pop in the market was, seemed to always underperform as the sentiment of recession got worse throughout the year. Consumer discretionary, I think we saw it down 35% total. There are definitely areas within that were even worse. We see things like internet and direct marketing retail down 45%. We've seen advertising in general be a space that people just aren't participating in, aren't engaged in, people trying to sell them ads or new products that they don't really need, and that's taken a big hit. The retail composite down 32%. As well as general merchandising stores down almost 20%. One very interesting area of this information is specialty stores only down 10%, even though the retail composite was down 30%. So stores that do something niche or serve a specific need held up a lot better than just general merchandise, it seems. And the other interesting thing is kind of casino and gaming. We'll go through a bit more on the next slide, but more entertainment elements of discretionary consumer segments held up a lot better, which is a bit surprising, but maybe just everyone after 2020 and 2021 being able to get out again and have fun with their friends was really a big trend that was hard to break to the same extent as the consumer discretionary sector overall. It's still down, but just more in line with the overall market instead of down, 30-40%. Going into that a bit more here, you see restaurants only down 5% on the year, cruise lines, hotels, resorts down about in line with the S&P, and casino and gaming down 16%, so also about in line with the S&P. What's interesting is you see right off the bat at the beginning of the year, restaurants did take about a 15-20% hit, and throughout the year, as everything else in the market broadly went down, restaurants really held up well and actually ended the year off a lot better. So I think restaurants were kind of coined as this option of getting out with friends and enjoying a meal or doing something with friends and family that didn't need to cost a lot of money necessarily, depending on where you go. And it's held up to be somewhat defensive, even though it's categorized as a discretionary part of the economy. So something to watch there as well going into 2023. Another interesting piece of this information within the S&P 500 2022 actuals as we look across sectors is how broad the performance in the real estate sector was. See, total real estate down 25%, but there's things like hotels and resorts that's really feeding into that soundbite that we were talking a couple slides ago, perform really well, up 4% on the year actually. Whereas there's other areas of real estate like office REITs, real estate services down 30-40%. So just got absolutely crushed, as not only are they dealing with higher interest rates, but also fighting, more remote work, less people trying to buy office space, especially in Class B, Class C areas. So really interesting to see that real estate is an area where you could have done okay despite large interest rate increases, but you could have also got it handed to you this year. So be careful with kind of your mix of real estate within your portfolio and what's more defensive versus maybe a bit more risky to hold. Okay, and I'm just going to wrap up here with going back to the first slide that shows all of the different sectors of the S&P 500. And for me specifically, as we go into 2023, some of the areas that I'm looking at, I think financials are generally priced pretty well right now. Obviously, that's because we may have some broad economic headwinds around the corner. I think financials are positioned really well from a valuation standpoint, but they do have some future risks. So it's one that I'm going to consider nibbling into and averaging into a bit more, but also being cognizant and watching the broader economy to see what risks may be coming there. Overall, I think if you stick with the strong financials and not risky elements of the financial segment, long term you'll do well and you'll be able to really capitalize on the strong returns on investment capital, as well as the low valuations on like a price to earnings standpoint. The second area is real estate. They've gotten crushed as interest rates have gone up. But I think as long as you're investing in the right areas of the REIT sector or real estate segment with REITs, and you're careful on a company by company basis, what payout ratios are like, how much they're reinvesting in their business, how long term their leases are, things like that. It's going to be a great source of income that's going to continue to feed your portfolio throughout the tumultuous year we may have ahead of us. So those are two areas that I'm going to be looking within, not just like the broad sectors themselves, but looking for some diamonds in the rough within those two areas that I think, given they've had a bit of a hit this year, may be great opportunities for the future. Anyways, would love to hear what you guys are looking at for next year. Are you guys looking at taking advantage of some of the sectors that have declined the most? Are you guys staying far away, waiting to see how things play out? Let me know in the comments, and thanks for joining me for this one. Bye.